The bulk of Forex trading takes place on the interbank market. Unlike stock exchanges, Forex has no single physical location or central exchange. It runs electronically across banks and financial institutions 24 hours a day. Trades can happen anywhere. If you have an internet connection, you can join. The market is over the counter, a network of banks and non-bank financial firms. It's the largest and most actively traded financial market on Earth. Here are the 7 most actively traded currencies. Because 2 currencies are in every trade, totals reach 200%. The US dollar appears in 84.9% of transactions. The euro is second at 39.1%, the yen, about 19%. The dollar is king. It's 1/2 of almost every major currency pair. Why? A few key reasons. First, the United States is the world's largest economy. Second, USD is the global reserve currency with huge liquidity. Third, a relatively stable political and financial system. Fourth, it's widely used for international trade. Think petrodollars. IMF data shows the dollar makes up roughly 62% of official FX reserves. Foreign bank assets and USD-denominated securities total around $16.7 trillion. Forex transfers funds from one currency to another. It provides short-term credit to finance international trade. It helps businesses hedge against exchange rate risk, and it's a major arena for speculation. Speculative trading makes up the bulk of volume. Estimates exceed 90%. That huge volume gives Forex very high liquidity. Large trades move price little. But liquidity varies by currency pair and time of day. Session timing matters. In short, Forex is huge, electronic, and extremely liquid, and the dollar dominates. Next, we'll explain how trading times affect pairs and volatility. Ready to learn more? Join our trading sessions. See you in the next lesson.